PantheonAI presents Apple's AI push, Fed Decision Looms. And is the AI bubble real? Welcome back to the PAI Morning Briefing. I'm your host from PantheonAI, and it is Tuesday, May 7th, 2025.
Good morning, everyone. Hope you've got that coffee ready because we've got quite a bit to cover today, diving into yesterday's market moves and what's shaping up for today.
Absolutely. Let's jump right in with a quick market overview. The S&P 500, just kind of stumbled a hair yesterday. It closed slightly lower at roughly 5,160.84, down just about negative 0.06%.
Yeah, that tiny dip seems to be a bit of a theme lately, doesn't it? But interestingly, the Dow Jones actually managed to eke out a positive close.
It did. The Dow finished up at around 41,047.43, showing an increase of about positive 0.22%. It feels like those blue chips just took a little breath of fresh air, maybe anticipating that upcoming Fed meeting?
Could be. Meanwhile, the Nasdaq, which is usually the high flyer, ended the day trading down. It finished at approximately 17,626.73, down nearly negative 0.45%.
And the small caps, the Russell 2000, were also down slightly, standing at roughly 1,988.77, down about negative 0.25%.
So a mixed bag for the traditional markets then. But shifting gears to digital currency, Bitcoin is holding steady, close to 96,984.5, inching up by about positive 0.16%.
And Ethereum saw a modest climb too, trading at around 1,821.36, up approximately positive 0.25%.
It is fascinating to see that divergence, isn't it? Conventional stocks reacting to macro and international dynamics, while crypto seems to be charting its own course.
Totally. Now let's pivot to some of the major trends shaping things. One of the biggest conversations is definitely around the upcoming Federal Reserve decision.
Oh, absolutely. We've been talking about this since President Trump's Liberation Day tariffs announcement back in April. Investors are really waiting to see the first policy decision since those tariffs landed.
Right. That interplay between domestic policy shifts and global economic conditions, especially with China, is really setting the stage for some dynamic trading. You can feel that cautious optimism, or maybe just jitters, in the market.
For sure. Everyone's weighing whether the Fed's decisions might offer some clearer guidance amid all this geopolitical uncertainty.
Speaking of China, the Asian markets are obviously watching this closely too, with trade policies in flux since those tariffs, and that delicate balancing act they're doing. Chinese markets could definitely send ripples globally.
Yeah, investors are really asking, will the Fed signal a more accommodative stance to try and stabilize things? Or are we heading into a more hawkish tightening phase? It does feel a bit like waiting for that plot twist in a thriller, doesn't it? Except, dollars instead of dragons.
Aha, good point. Another major trend that's really grabbed attention is the tech sector's embrace of AI. Apple's Vice President of Services, Eddie Q, made some headlines by suggesting they're exploring AI integration into their search browsers.
Wow, just think about that for a sec. If your Apple devices start getting even smarter AI assistants, what does that mean for the whole ecosystem?
Exactly. That news sent waves, and tech shares reacted. It really signals that a significant shift in consumer technology might be coming. But, as we've seen, innovation always comes with risks, right? Sometimes, the brilliance gets dimmed by regulation or intense competition.
Definitely. And if you thought that was all the tech drama, there's also this growing narrative that fears of an AI bubble might actually be overblown.
Oh yeah, I've seen those reports. The big hyperscalers have been reassuring investors, showing that spending on AI is still a major priority.
Right, so while some people are ready to write off the AI story as a bubble waiting to pop, the reality on the ground is companies are still pouring money into AI development. Market sentiment here seems cautiously upbeat, with analysts predicting strategic AI investments could really pay off in the coming years.
It's kind of like watching someone juggle flaming batons, isn't it? You know there's danger, but it's just too fascinating to look away.
Ha! Good analogy. And speaking of Apple, there's that other story that keeps popping up about its stock performance linked to its share buyback activity.
Ah, yes. The narrative that Apple cut back on buybacks, and that hit the stock. Some analysts are arguing that sellers might be overlooking important fundamentals because they're focused on short-term trading.
Which is a really interesting take. Maybe your portfolio shouldn't be a bedtime story, but you probably should look past just the headlines sometimes.
Exactly. Understanding these nuanced shifts really means peeling back the layers. Corporate strategy, market psychology, and investor sentiment, which can be as unpredictable as a cat on a hot tin roof.
So let's just quickly recap the stories we've covered that seem to be on repeat in the news cycle. We've got the persistent chatter about the Fed's decision.
Definitely. That's been reiterated multiple times.
Then the buzz around Apple potentially integrating AI into its search browser.
Yep, big tech innovation story.
Followed by the discussion about whether fears of an AI bubble are overblown.
That narrative keeps getting airtime.
And finally, the repeated focus on Apple's reduced share buybacks.
Right. These stories are making multiple appearances, reinforcing that the market is really attuned to potential shifts in policy annotation to a technological innovation. And why wouldn't it be? When regulatory decisions and tech innovation converge, it's prime time for volatility and opportunity.
Agreed. Let's shift gears now and look at some detailed sector analysis. In tech, it's clear that AI momentum isn't slowing down.
Not at all. Whether it's Apple exploring new AI integrations or the hyperscalers reaffirming their spending commitments, the sector seems to be on a steep upward curve of investment.
But, this sector is also bracing for regulatory scrutiny and competition. Lawmakers are raising concerns about privacy and data security. Could that regulatory cloud put a damper on things?
That's the big question. Only time will tell, but we're certainly keeping an eye on it. Switching to energy, while it's not leading headlines today, it's still super intertwined with the global economic outlook and trade policies.
Definitely. Nations are realigning policies based on environmental mandates and fluctuating oil prices. Investors are watching energy stocks warily. It's a sector that knows volatility, and policy adjustments make it risky but vibrant.
Yeah, even if you avoid the oil price stance, energy fuels the economy, so it's always on the radar. Now, finance responses to the Fed decision are critical here.
Absolutely, the financial sector is really on the front lines of market reactions. That slight Dow upswing, mixed with other indexes, shows the delicate balance they're trying to strike.
Banks, insurance, asset managers, they're all in a tight spot, prepping for what's next. It feels like a high-stakes poker game, right? Everyone's reading signals. Stakes are sky high.
Totally. You could say the finance sector is whispering, place your bets wisely, because the next card could change everything.
Nice. Globally, the implications of these domestic and international trends are unfolding fast. Markets everywhere are tied to U.S. monetary policy and trade relationships.
China's market, particularly, is at the center. How they handle trade post-quote Liberation Day tariffs and their own internal policies could set the global market tone. Investors worldwide are dissecting comments from Chinese officials like seasoned surgeons.
Without the scalpel, maybe, but precise analysis. Let's pause for some expert insights. From my perspective, that slight dip in the Nasdaq could just be a temporary pullback as investors digest the AI news and potential regulation.
That makes sense. And the optimism in the Dow suggests stability among large caps, which benefit from diversification.
Exactly. And crypto, Bitcoin and Ethereum, still showing resilience. They're really carving out their own niche. It's like each sector has its own rhythm, but they're all loosely connected in this overall economic symphony.
I like that analogy. I always say investing is like cooking a fine stew. You need the right ingredients, careful timing, and maybe a pinch of humor to keep it palatable.
A pinch of humor, huh? Got any market jokes for us?
Well, did you hear about the trader who said the market felt like a yo-yo? He claimed even though he was always up 1 minute and down the next, his emotions were never on a roller coaster ride.
Okay, it's a classic. But you're right, a little levity helps keep perspective during fluctuations. Circling back to our comprehensive coverage, that repeated emphasis on the Fed's decision since the, quote, Liberation Day tariffs is key.
It really is. Every channel is buzzing about whether the Fed goes accommodative or tightens up. This decision could have a domino effect on liquidity, loan rates, everything, from huge conglomerates to local banks.
And then Apple's news. The idea of AI in its search browsers isn't just a tweak, it's a potential paradigm shift. It's about reimagining how millions interact with tech daily.
Yeah, the market reaction, that dip in the Nasdaq, the slight negativity in the S&P, it tells us investors are juggling excitement and caution. Apple's move could really shake up tech competition.
Definitely. If Apple, known for innovation, integrates advanced AI, others will follow. And then, there's that AI bubble narrative again. Maybe it's overblown?
That's what analysts argue. The capital influx might not be reckless, but a strategic long-term commitment. If investments are measured, maybe it's just the market overreacting to a surge in optimism.
Like a balloon blown up quickly. Seems destined to burst, but done right, it just provides a delightful bounce. That risk-reward keeps investors on their toes.
Exactly. And we can't ignore the recurring Apple share buyback discussion. When they reduced them, the market reacted negatively. That's a clear signal. Corporate giant actions have tangible impacts on shareholder sentiment.
Totally. It's repeated across outlets because it's a reminder that behind the numbers are real strategies. Adjusting buybacks is a proxy for how companies view their future and the economy. A subtle but potent signal.
Looking at sector dynamics more broadly, tech is a blend of optimism and cautious recalibration. Regulators worldwide are tightening reins, making the road both promising and perilous.
But with strong fundamentals and AI investment, tech could be poised for long-term growth despite short-term volatility. It's like a chess game. Every move is calculated. Even small ones have big consequences.
Meanwhile, energy and finance tell a fascinating story linked to global trends. Energy is dynamic, balancing sustainability and demand.
Right. Shifts in energy policy and prices have cascading effects on inflation and monetary policy. Finance reacts by tweaking strategies, balancing risk and yield. Even safe harbors are bracing for shifts, like a seasoned sailor checking the winds.
On the global front, every whisper from Washington, Beijing, or Brussels ripples across continents. Local decisions have international implications. A Fed policy change could shift capital flows between developed and emerging markets.
And China's response to tariffs could reshape supply chains globally. It's a complex web, a delicate dance between national interests and global cooperation. How might emerging markets react if major central banks change course?
Exactly. Those questions keep the financial world endlessly fascinating. As we piece this together, a theme emerges. Everything is interconnected. Fed anticipation, Apple's AI strides, corporate strategy shifts.
Investors are navigating challenging but exciting terrain. Each sector has uncertainties, but the overall message is consistent. Caution paired with opportunity.
Let's bring it all together with some final insights. Volatility can be a prelude to growth. Current dips might just be reactions to anticipation ahead of pivotal events.
Good point. And with tech advancements, stay informed but don't overreact. It's easy to get caught up.
Definitely. And with those repeated headlines, Fed policy, Apple's moves, it's vital to separate substance from noise. Is the market overreacting? Or is it a calculated response to a new strategic landscape?
Ah, the riddle wrapped in a mystery. But that's the kind of puzzle that leads to opportunities if you approach it diligently with a long-term perspective.
Well said. Just some final thoughts on sectors to watch. In tech, keep an eye on giants like Apple and their AI integration. Innovation is strong.
In finance, that balance of risk amidst evolving policy needs careful monitoring. Even micro changes can portend larger shifts.
And don't forget energy and emerging markets. They're quietly setting the stage for economic rebalancing in this post-tariff, post-pandemic era.
That global domino effect is so clear. Every national decision reverberates globally. It underscores the need for a robust, thoughtful investment strategy, considering immediate risks and long-term possibilities.
Before we wrap, let's leave everyone with a few questions to ponder. What do you think the market response will be if the Fed makes a surprise move?
Could Apple's AI pivot lead to an industry-wide revolution, or is it just incremental?
And globally, which emerging market is best positioned to capitalize on shifts in U.S. and Chinese trade policies?
Great questions. These are the things that keep the dialogue fresh and opportunities ripe for those willing to look beneath the surface. As always, we encourage you to share your thoughts, ask questions, and engage with our AI copilot for tailored insights. This investment journey is collaborative.
Absolutely. Whether you're a seasoned trader or just starting out, every market moment is an opportunity to learn and evolve. And remember, learning shouldn't feel like a full-time job.
Couldn't agree more. So just to reiterate our key takeaways today, the market's processing a mix of optimism and caution.
The impending Fed meeting and global trade dynamics are pivotal.
Technological innovation, especially AI, is a key driver of both enthusiasm and scrutiny.
And a strategic, well-informed approach is our best tool for navigating these complex narratives.
Well said. Thank you again for tuning in to today's PAI Morning Briefing. Remember, Pantheon AI is your information copilot, guiding you through this intricate web of financial insights.
We look forward to seeing you back here for the next episode tomorrow. Don't forget to come back and ask questions anytime. You're part of a community that believes in sharing knowledge and fostering dialogue.
Until next time, stay alert, stay informed, and keep questioning.
And always remember, learning shouldn't feel like a full-time job. Pantheon AI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.